Okay, good morning, everyone. Let's get right into the stock market technical analysis. I'm going to go through all my charts. We're going to show you guys where the opportunity lies. So if you guys find value in the content, drop me a thumbs up. If you're interested in learning this as a skill set and not just watching YouTube videos, take my course, link in the description below, and also join the private membership. It's $5 a month. I'm throwing out trade ideas, kind of private members only trade ideas. Can't guarantee all of them are going to work, but they're good setups. And I throw them out there, try to get market commentary out to you a little bit quicker. So join that. There should be a link in the description to join that as well, or it should be a join button next to the subscribe button. So check that out if you're interested. Let's get into the charts. All right, triple Qs. We hit our target today, 329.50. There it is. That's basically, that should be resistance. You got the 200-day slightly overhead, but we're at resistance right now. The divergences, if I go to the hourly, they still remain here, so nothing's changed. We just made a new divergent high, continuing to hold negative divergence, and looks good. So I added to my short position this morning. I'm pretty much at a full position now. I'm not going to add any more. And I'll show you why I think we're done with the rally. And again, I've talked. There's possibility for maybe slightly more upside. I just don't see a whole lot more. Again, the risk reward to the upside is just not worth it. And obviously, you're gonna get FOMO buyers who are in there. They've got to just buy momentum. They see the price going up, they're happy. Again, I talk about this. Retail, basically, when the price goes up, they're happy and everything's great and don't fight the Fed. And then they always get caught, on the wrong side of things. Okay, so again, I could be wrong, but I think we're at the top. Let's go to. And then let's look at targets. So again, we still have this uptrend. If I go to the hourly chart, this is the uptrend, the rally that Triple Qs has been in since since back here in June. And that could be a target right there. So you can see support. I know I got green marks all over the place, guys. I got to clean it up, but I'm doing daily videos and pointing this stuff out. So down here is the target, right about 296-ish. That would be our target. From where we're at now, that would be a drop. That'd be a nice trade. A drop of about 10%. So yeah, I think that's where we're heading. That's how I'm trading it as of right now. That's my plan. Let's go to IWM. Looking at this one. Ran right into the 200-day moving average right there. You're going to get a reaction there. After an extended downtrend like we've been in, there's going to be sellers just waiting to step in there. I mean, it's just very, very probable. Not guaranteed, but very probable. So this one, for one, I'm going to watch they've been chopping this thing around. We had a pretty nice little bearish rising wedge pattern, but then coming into the CPI, it got really sloppy. You can see breakdown, break up, breakdown, right along the trend line, break up. It's just all over the place. So it's hard to say which way it's going to resolve. I'm going to lean on Triple Qs to be more of my guide, just because it has the large cap tech stocks, and if those drag the market down, IWM's coming down with it. Okay, the other thing I want to point out is, let's look at some of these sectors. XLF, financials. You'll see here on the daily chart, boom, right into resistance. Right there, resistance. All right, that line, that trend line, if I go to the weekly chart on XLF, that's big. There's lots of reactions along that. I've pointed them all out. Boom, boom, boom. See them all circled? There's another one right there. And then as you zoom in, big sell signal that we recently had, and we rallied right into resistance. All right, that's resistance. You want to sell the rip. That's how it works. When we're in a bear market, you want to sell the rip. And we're at resistance. So there you go on that one. Next up, XLY, pointed this one out. This is a weekly chart, but again, you can see we're at resistance and we're right there. All right, if I go down to the daily, nothing's changed. We're still in the area. I suspect it rejects right in this area with the others. And my trend line might be slightly off, but again, oops, we're right there. XLI, this one I think slightly above, but right into the 200-day moving average. So I would, and again, my trend line's not that great because I only have two reactions, 1, 2. So that one's I don't have any trade really that I like on that one. I'm more interested in the cleaner charts that like XLF. Let's look at XLK. It's another way to look at tech. So again, data points, kind of a cluster though. You got a cluster here, a reaction here. We gapped up or I mean, we moved above this trend line, but right into the 200. I suspect it fails, and this proves to be a whipsaw signal, especially on the weekly chart. If I go to the weekly, you can see we're above that that trend line right now. I suspect by the end of the week we're back below it, and it does prove to be another data point on this trend line. Okay, a couple trade ideas. Let's follow up on this one, LLY. If we are going to continue to sell off, and I'm seeing it happening right now, guys, but if we are going to continue, then look, we got a bear flag on LLY. So there's your flagpole. Here's your flag. It's kind of flagging out like that. We just measure the projected target. It's basically putting us at the 200-day and roughly around 279. So again, anywhere in that area would be a good profit target. And I think we'll probably start to resolve maybe today. Looking at the hourly, you can see we've got this wedge. So a breakdown of this would set us up for continuation down to that 279 area. I think we get that. Okay, so I still like this one. Disney, I pointed this out in my video yesterday, talking about the hypothetical of how this would likely play out, and it's playing out exactly as I expected. So going to the daily, look here, you've got this. It was a potential trend line right here because we only had 2 data points, 1, 2. But after hours, the earnings, they were gapping up way up here. And at least I think I pointed this out in the video. And then they were gapping up right around 120, and I thought, okay, they're going to run right into this trend line and then reject and sell off. And that's exactly what's happening. All right, so at this point, I think we head down to this 113.08. And then I'd probably pull the trade there, To me, that's it. Just gap fill for now. Okay, but, if you catch the trade, and I took a short position this morning. It's a 7% in a day or so. I like it. Moving on. And commodities, you can see here, they continue to catch a bid. I mean, I'm looking across the board. Nothing huge, but they're bid. All right, you've got this nib. That one looks good. Looks like it's continuing to hold above. We'll see if we can't get some more buying and kind of confirm that breakout yesterday. Wheat up 1%, kind of grinding around there, not really moving anywhere up or down, but hanging in there. Soybeans continues to rally. I'm just looking across the board. The commodities continue to get bid. So guys, I think the smart money's buying commodities. They're not buying the market. That, to me, that looks like a trap. And looking at triple Qs starting to sell off. Looks like we just gap filled. So maybe they'll try to hold it here today. But I suspect that we're moving down from here, okay? Whether that, I don't know if we'll get it all today, but I suspect we're moving down from here. So that's all I got, guys, for the video. Drop me a thumbs up on your way out. And if I see anything else interesting, I will put it out there. Thanks. Bye.